We now answer part B, which says Professor Edward Altman's model for prediction of bankruptcy is given as follows. Z score is equal to 1.2x1 plus 1.4x2 plus 3.3x3 plus 0.6x4 plus 0.999x5. x1, x2, x3, x4, and x5 are the financial ratios which, according to Professor Altman, have the discriminating power where x1 is a net working capital, x2 is a retained earnings or total assets on total assets, x1 is a net working capital over total assets, x2 is a retained earnings over total assets, x3 is operating profit over total assets, x4 is a market value of equity shares over book value of debt, including preference share capital, x5 is a sales over total assets. Given below are summarized financial statements of Alpha Limited for the year ended 31st December 2019, December 2019. There is the income statement for the year ended 31st December 2019. Then we have the statement of financial position as at 31st December 2019. Then below the statements, there is a sentence that says that in this model, a Z score of 2.7 or more indicates no signs of failure, and a Z score of 1.8 or less indicates there are signs of failure. The firm's ordinary shares are currently trading at 15 shillings each. Required, Roman 1. The Z score for Alpha Limited, 5 marks. Roman 2. Comment on the results obtained in B1 above. 1. That's the question. Candidate, this was an easy one for candidates who appeared in November 2020 because you can see the candidates who are given the formula at these levels. You're expected to know the formula for Z score. The inputs in the formula are also defined in the question. Then candidates were to come up with the to determine the Z, to calculate the Z score to earn the 5 marks. In the same question, candidates were given a hint on how to comment on the results. Below the question, we read that in this model, a Z score of 2.7 or more indicates no signs of failure, and a Z score of 1.8 or less indicates there are signs of failure. So that gives you a hint on what you comment in part 2. Because you are told that if the Z score that is calculated in part 1 is less than 2.7, is 2.7 or more, then there are no signs of failure. And if the Z score is 1.8 or less, then there are signs of failure. So that gives you a hint on how to earn the 1 mark. For the first part where you are supposed to calculate the Z score, you've been given the formula, you've been given the variance, and the data is also provided, which is straightforward. Like determining the net working capital, total assets, that one you easily read, get them from the balance sheet. And a brief comment on the sentence there, candidates, that says about the Z score of 2.7 and that one of 1.8. That statement is not complete because, candidates, the Z score is the output of a credit strength test. The Z score helps gauge the likelihood of bankruptcy for publicly traded companies. The Z score is based on 5 key financial ratios that we have read in this question: X1, X2, X3, X4, and X5. And These ratios are calculated from a company's annual financial statements. All right, and we've seen that it was developed by Professor Edward Altman. Now, we've read that the Z score of 2.7 or more indicates no signs of failure, and a Z score of 1.8 or less indicates that there are signs of failure. The reason why I say this statement is not complete is because the Z score can also fall between 1.8 and 2.7, because here we are reading if the Z score is 2.7 or more, then if it is 1.8 or less, that means there is the Z score value can also fall between 1.8 and 2.7. And we've read that if the Z score is less than 1.8, the entity is in a non-bankruptcy zone. If the Z score is less than 1.8, then the entity is in a bankruptcy zone. And for the values that fall between 1.8 and the 2.7, there is no definition of the entity's situation, and therefore that range between 1.7 and 1.8 and 2.7, that range is known as the gray zone area. Gray zone area. So let's now move to answer this question. We will first calculate the Z score. The Z score. This is a B. Z score. The formula is given here in the question. Is equal to 1.2x1, 1.2x1 plus 1.4x2 plus 3.3x3 plus 0.6x4 plus 0.999x5. That is the formula for Z score. Then we have read in the same formula, countries were given the values for this ratio. These are ratios. The first ratio we see is equal to net working capital over total assets. Okay, x1 is equal to net working capital over total assets. X2 is equal to retained earnings over total assets. X3 is equal to EBIT, operating profit, over total assets. X4 is equal to market value of equity divide book value of long-term debt plus preferred share capital. This formula is given in the question, but I said earlier, make sure you memorize the formula, because the next time the examiner may not give you the formula. So we'll then move to the question and check the inputs. We calculate these ratios, then we'll substitute the ratios in the main formula. We are going to substitute the ratios there. So candidate, the net working capital is current assets 100 million minus current liabilities 20 million. 100 million minus 20 million divide total assets 400 million. That will give us the X1. X2, retained earnings 120 million. 120 million divide total assets 400 million. EBIT, earnings before interest and tax. Earnings before interest and tax, 40 million. We divide total assets 400 million. Then X4, market value of equity. Market value of equity, we are going to get the number of shares. Then we multiply by the market value of shares. We read the firm's ordinary shares are currently trading at 15 shillings each. So we get the number of shares. The number of shares we read there, financed by ordinary shares, 10 shillings each, 100 million. So the number of shares will be 100 million. We divide by the par value of 10 shillings. 10 shillings. This will give us the number of shares. Then we multiply 15 shillings. 15 shillings divide by the book value of long-term debt. Long-term debt is 80 million. Long-term debt, that is 10% debenture capital, 80 million. Preference share capital, 40 million plus 40 million. The rest is the work of the machine. So I'll divide 80 million by 400 million. 80 million divide 400 million. X1 0.2, then X2 120 divide 400 0.3, X4 40 divide 400 0.1, X4 this is 10 million divide, that is 10 million times 15 divide 120 equal to 1.25. So that is X4. Then there is X5. X5, we need to include X5. X5 is equal to sales over total assets. Sales over total assets. Sales, we have 400 million divide assets 400 million again. So 400 million divided by 400 million, this is equal to 1. It's equal to 1. Therefore, candidates, the Z score will be equal to, we are going to substitute the ratios in the main formula. the Z score will be equal to Z score will be equal to 1.2. So 1.2 times x, 0.2 times 0.2. Then we add 1.4 x, x2, this 1.4 times 0.3 plus 3.3 times x3, 0.1 plus 0.6 times x4, 1.25, 1.25. Then lastly 0.999 plus 0.999 times x5. Our x5 here is 1. So the answer here will be the Z score. The Z score. So I'm going to take 1.2 times 0.2 plus so the answer here is 3.739. So candidates, that is the answer to Roman 1, 5 marks. Roman 1, 5 marks. 1, 2, 3, 4, 5. 5 marks. Roman 2, advice. This advice, comment on the impact of, comment on the results obtained in B1 above. The question was easy because within the question, candidates were told that in this model, a Z score of 2.7 or more, and you can see this one is 2.7, is more than 2.7. This is 2.739. We read a Z score of 2.7 or more indicates no signs of failure. And a Z score of 1.8 or less indicates signs of failure. So the comment is that this company shows no signs of failure. All right. Roman 2, the comment. Alpha Limited is financially stable. It does not show any signs of failure because it has a Z score of more than 2.7. That is the comment.